Appreciate you having me today. Again, my name is Chuck Lugey. I'm head of execution services at sFox. First and foremost, I'd like to thank Bruce and Gabby and Global DCA for hosting and organizing the event. Given the situation in our industry and the current circumstances, I believe it's really important to curate thought leadership and foster collaboration. It's more important than ever. With all the negative news out there, it's easy to forget that some of the strongest crypto companies have been established in some of the darkest moments in the industry. So, for example, sFox was founded in 2014. We've actually weathered every crypto winter since. And I believe that once the smoke clears from these latest events and we've gotten back to some semblance of normalcy, I believe the opportunity for continued innovation in this space will flourish. And I'm pretty confident about that. But a little background on sFox, if you're not familiar, we are a full-service crypto prime dealer that aggregates 30-plus different exchanges and OTC desks on one platform. And our goal is to provide a best execution experience for our institutional customers by giving them access to the deepest, most unique pools of aggregated liquidity available today. That's all with one connection, one counterparty, one workflow. So, much like what Dave was saying, we're looking to get traditional institutional players into the business and trying to make it as comfortable for them as possible. A little bit about myself. David was talking about people like me. I spent 20 plus years in traditional finance, most of my time trading equities and options for some of the largest electronic market makers in the space. I spent 15 years with Knight Trading, that's today's Virtu Financial, and another 4 years with Citadel Securities. And both of my positions there were with the wholesale market making businesses. And because of my time within that space, execution has really become my expertise, both from a trading perspective and from a market structure perspective as well. So finding the best prices for my clients, that really became my priority throughout my career. I distinctly remember when I decided to make the move from traditional finance to digital. It was last fall, and I was attending the annual Equity Market Structure Conference hosted by the Security Traders Association in Washington, D.C. And all the same players were there. They were talking about all the same topics, market fragmentation, exchange fees, payment for order flow, CAT, you name it. It was all the same boring conversations, except there was something very different in the rooms that weekend. Everybody was talking about digital. Everyone was talking about crypto. So all of the sidebar conversations I heard was they were either talking about their personal accounts or institutions looking to make the leap and adopt the asset class. And I realized I was on the wrong side of the business in terms of growth. So timing was perfect. A contact of mine at sFox told me about a good opportunity, and I jumped at it. And from sFox's point of view, from their characteristics, it fit perfectly within my strengths. So it was a perfect fit. And as a trading platform with an institutional focus, it had an emphasis on best execution. And that was really my skill set from the traditional finance side. So that's really why I made the transition, and I've been here since the end of last year, and I'm glad I made the change because it's the concept of best execution within crypto. I'm not even sure if it really exists, right? So from a perspective of trying to get institutions to adopt the asset class, it's something that we have to get them comfortable with. So I think that today we can agree that the asset class is going through a crisis of confidence from outside observers, most notably from potential regulators. We recently saw the Loomis Gillibrand Responsible Financial Innovation Act introduced, and that's being marketed as a crypto-friendly type of bill. We're going to really wait to see whether or not that's going to be adopted. There are a lot of doubters out there. While it seems to have bipartisan support, we'll see how Congress responds in the next weeks and months to come. But because of things like this, I think it's more important than ever that we have some sort of best execution standard adopted within the industry just to get those institutional players that we want to come into the space more comfortable with it. So that being said, though, I think that there are some inherent challenges that exist, the most significant being the fragmentation in the marketplace. From an equities trader's point of view in traditional finance, we had always complained about fragmentation within those markets. Well, I can tell you, they have no idea what fragmentation looks like until they look at the crypto landscape. In terms of that, you're looking at 600 plus different exchanges and market makers throughout the world. It could be a very daunting task for institutional investors to gain access to the best price at any given time. So in traditional finance, they rely on best execution practices that are mandated by financial bodies like FINRA with Rule 5310, or within FX, the FX Code of Conduct. Digital assets, these markets, they should implement something like that now, rather than waiting for regulators to impose it on the market. Best execution, it will not only protect investors, something that David had alluded to before. Currently, investors don't have that protection. Best execution will be a first step towards that. But it's also going to drive confidence in execution, and that will influence institutions to adopt the asset class even more. But what does best execution look like in our space right now? How does one define best execution? Often, best execution is misunderstood to only mean the best price. Yes, price is a primary importance when considering best ex. However, there are other factors to consider, such as fill rates, market impact. When institutional investors are able to optimize all three factors at once, that's when they arrive at a place where best execution exists. Also a place where they can get in and out of assets efficiently and mitigate costs. So at sFox, and I'm trying much as possible not to talk my book, but we're trying to stay ahead of the curve when it comes to best ex. In the short term, we feel it's necessary in order to bring new institutional players into the asset class. But also from a long-term perspective, from a regulatory standpoint, there will eventually be some kind of concept of fiduciary responsibility that execution providers will have to have for their end clients at finding the best price. And so at sFox, we found that aggregating multiple sources of liquidity on one platform results in better price discovery with tighter spreads. And as recent events have shown, access to deep pools of liquidity, especially during periods of market stress, that's essential. Traders need to be able to scale into and out of positions efficiently in order to mitigate risk. They need to access these aggregated pools of liquidity, and it also provides institutional traders a familiar level of comfort within a quasi-synthetic national best bid and offer, so to speak. It's difficult to actually just create a national best bid and offer that's similar to what we have in the traditional finance world. But if you pick and choose the right liquidity providers with volume and the least market slippage, you can do that. And it's something that I think that institutional traders will really embrace once they come into the space. So, in conclusion from my remarks, I think that from a best ex perspective, the industry really should adopt some kind of standard. It's the right thing to do for our clients. It's going to help drive greater institutional involvement in the digital asset market. It's my hope that the regulators, whomever they may be, will consider these points when establishing guidance for the industry as a whole. And as we've seen in traditional markets, best execution will move the entire industry forward and drive broad-reaching transparency and trust between investors and execution providers. I can open up to any questions that anyone might have. Sure.
I have a question.
Sure.
In the future, would you see Bitcoin becoming a currency much like any of the other currencies that currently exist, and therefore take some of the asset class concept out of it?
Are you referring to fiat currencies or just any currencies?
The dollar, the yen. If you're comparing it to the traditional currencies, is that where you would want to see Bitcoin go, to become just another currency?
Listen, I'm token agnostic. I know that Bitcoin is definitely a fan favorite for so many, and it has many disciples. I feel that it can be definitely a benchmark, almost similar to gold, so to speak. But if you take a look at how Bitcoin is handled today, no one's really using it to pay for things. People are really just using it to hold, and they're using it to hold as an asset. I believe 60% of Bitcoin hasn't been moved over the past 4 or 5 years in terms of buying and selling. So insofar as you want to compare it to any sort of currency, whether it be digital or fiat, I don't think it's going to be handled that way. But I think it'll definitely be a benchmark within the space. Great. Thanks, everybody. Appreciate it.